Welcome to Smart Stock Watch. Today is March 12th, 2025, and we're diving into the latest earnings report from Smith Douglas Homes. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Smith Douglas Homes has just released their fourth quarter and full year 2024 results, and there's a lot to unpack, especially as this is their first year as a public company.
Revenue and profitability overview. Let's start with the top line. Smith Douglas Homes reported a significant increase in home closings and revenue for Q4 2024. John, can you break down these numbers for us?
Absolutely. The company saw a 28% increase in home closings, reaching 836 units, and a 32% rise in home closing revenue, totaling $287.5 million. Despite a slight dip in net income to $28.8 million from $29.7 million in Q4 2023, the earnings per share met the forecast at 46 cents, which was anticipated by 3 analysts.
That's impressive growth. What about their profitability margins?
The home closing gross margin was 25.5%, slightly down from 26.7% last year. This indicates some pressure on margins, but overall, the company has managed to maintain strong profitability.
Operational efficiencies and future outlook. John, let's talk about operational efficiencies and the future outlook. How is Smith Douglas Homes positioning itself for future growth?
Smith Douglas has made significant strides in operational efficiencies. Their debt-to-book capitalization has dramatically decreased to 0.8% from 26.6%, which is a strong indicator of financial health. They've also increased their active community count by 13% to 78 and expanded their controlled lots by 52% to 19,522.
That's quite a leap. What did the leadership have to say about these results?
Bennett, the CEO, highlighted the strong year-end performance and record quarterly closings. He expressed gratitude to the team for making their first year as a public company a success. The CFO, Russ Devendorf, also mentioned their strategic expansion in existing and new markets, which bodes well for future growth.
Market trends and strategic positioning. How is Smith Douglas Homes navigating the current market trends, especially with affordability issues and low supply of existing homes?
Smith Douglas is well positioned to tackle these challenges. They reported a 9% increase in net new home orders, totaling 569 for the quarter. The CFO, Russ Devendorf, mentioned that while affordability issues persist, the company is encouraged by solid traffic levels at their communities and online. Their value proposition of affordable pricing and customization is a key competitive advantage.
It seems like they have a strong strategic positioning. Do you think they can maintain this momentum?
Given their current trajectory and strategic initiatives, Smith Douglas Homes appears well equipped to maintain and potentially accelerate their growth, especially as they enter the 2025 spring selling season.
Key takeaways. To wrap up, Smith Douglas Homes has shown robust performance in their first year as a public company. John, any final thoughts on their investment prospects?
Smith Douglas Homes has demonstrated strong growth and operational efficiency. With a solid financial position and strategic market positioning, they are an attractive prospect for investors looking for exposure in the home building sector.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Smith Douglas Homes' performance in the comments below.